Hello, good evening, everyone. It's me, Calvin. Thank you for joining to our Sunday Market Prep. So we will need to look into the market right now and see, because last week wise the market was pretty bad with the closing. So I think a lot of people in the market, you will start to think like, oh my God, is the bear coming back? Mr. Teddy Bear, is it coming back? So after I look into it, it's not that bad. Basically, it's not all the stock that is going into a crash. Of course, all the stocks, a lot of stocks are going down, but we do see like 300 over stocks are still moving up. But those that is moving up is not like moving up a lot. So you can see here, some are like 6 cents or 3 cents over here. So still okay. But a lot of stocks are going down. So let's like those are index stock, component stocks, everything. But a few of them, when I look into it, it doesn't really show the sign that they want to have a continuation of price down. So even with the price down, with high volume, so having a roller coaster ride on Thursday, then we know that, oh, our new PM is there, so everything just fly up, and then on Friday everything just crashed out. But if you look in daily daily candlestick, it seems like very fearful. But when you look into the 5-minute chart, it doesn't really shows that. Why? Because you can see the price, the volume are mainly created at the bottom. So it is a form of support, a support only for this case. So it's not going to have any of the sign of rebound yet. So they might have like gradual price down, going down bit by bit. So from there, you know that, okay, they are supporting the price. So that's not much to worry about. Of course, some of them, they will have a bit of price rebound as well. Not this one, but this one I think it shows like have a price down, but same thing, mainly is coming from the bottom. Of course, some is at the top here, but we do see high volume comes in, but price not going down lower. So we know that it's the bottom here. So if it's at the bottom, so it's not going to go down too far from my point of view. Okay, so but it doesn't mean that it's going to have a rebound really quick soon. So probably 1 or 2 days after the market open, then let them form here, then we monitor and see whether they will have the price bounce back up higher. Okay, then the rest of it, like maybe this one here, it show price is down, volume is high, but when we look into 5-minute charts, when the price is going down here, do you see a lot of volume? No, right? High volume is here when it's marked up higher. So this one is during the closing stage. Closing stage wise, usually is those like institutional fund that are coming in or doing the transaction. So that's why there will be high volume. So usually I don't look into this because in institutional investor, they go for mid-term or maybe long-term. So from that itself, we don't really know like how far they want they want to mark up. But looking at this, they are coming in this much, so seems positive to me. Okay, so seems like they will have a bit of a price up in short term for this case. All right, so you can see there are still stocks are going like this, but of course those stocks that like this one over here, DNEX, a lot of people have been talking about it. So why is there a crash over here? You search around Google, everything, you don't find anything out from that. But this crash, you can see it coming actually after the price hike from here. Because this actually shows this price stretch over here. It shows that the big boys are distributing the remaining shares they have. So they distribute majority of the shares at the high side. How the big boys do is that they mark the price up higher and then distribute, throw down, throw down, throw down, throw down. All these price retreats here they are selling the shares. It's not the market that is selling the shares, because retail investor would not sell at the same point, because I have my own expectation, you have your own expectation, different people, different investors have their own valuation. So don't stop talking about like market is going to go down. My way of looking into it is this kind of price movement is not done by retail investors. If it's done by retail investor, it doesn't make sense. Why? You can see at this point over here is a resistance breakout. So resistance breakout with high volume, usually this is where the retail investor will enter, right? So if let's say enter, why would they sell it down, right? So it's not the retail investor that is selling down. So looking into this, we know that this is the price peak. Then you can see the price are going down lower and lower. Then every time when the price is up, you can see they throw down bit by bit, bit by bit, bit by bit every day. Oops, sorry. You can see they are throwing down bit by bit, bit by bit every day. Why is this happening? Is because they want to trap the retail investor in. Because retail investor, you will do a panic selling when the price are thrown down very quick. If it's thrown down very quick, you do panic selling. So they don't want you to sell. So what they do is that they throw down bit by bit. So give you one cut every day, so you don't feel that scary. So the scary part is that you fear that the sudden drop like this. Okay, so this one is foreseeable. So it's nothing's new to. It's not something surprise to me. But I think a lot of retail investors in the market, they are very surprised with this. But well, damage is done, so we need to look forward. Right. So even though at the losses, a lot of retail investors would not sell it. The reason is because they feel so pain if, let's say, they sell their stocks right now. Because if they sell right now, then you feel that, oh my god, there's a huge part of me missing, right? So it's up to you after that. Okay, so the rest of it, I think, okay, since the heaviest weight in KLCI is like Maybank, so let's take a look at Maybank and see how the price movement is like. Well, okay, we don't look into the closing time, the last section of it. High volume at the bottom, price down. It's not high volume, so nothing to worry about. Okay, so what we should do next week, trade based on the bottom. See any stocks that they have the sign, whether they will have the rebound that is coming, then you can look into it. All right, so of course, if let's say you have any question, you can write it down in the comment section. Right, and last week wise, I missed out one comment, so I continue on with it. Hopefully you see it. So yeah, so of course, next, I think nothing much to worry about. Plus right now, I think there should be a bit of window dressing, window shopping. What's the term that window dressing shop in window strategy, use other portfolio manager, yeah, window dressing. So there will be a bit of window dressing, so they will try to mark the price up higher so that it's not that bad looking into their portfolio performance, even though this year is bad, but yeah, they can make it not so bad. And plus right now earnings season is here, so you can look into some of the earnings to find some of the day trading opportunities. So this is what I do in the market. So you can see it from here. You can find it which one announced. So find those that announced on the last trading days, and then see which one have a surprise earning. So usually the next day they will have a price up. But of course, you need to look into those that is liquid. Those that is not liquid, then you can just forget about it. All right. Then also there's a lot of surprise earnings. So since last week, I think about last week, there's a lot of stocks are coming out announcing their quarterly earnings. All right, so it will be interesting. On Tuesday, our day trading session for a live stream, I will look into a bit more about this. Okay, so I will just, because I don't think there will be stocks attracting buyers, but definitely there will be stocks that the big boys will take advantage of all this price up over here to catch some of the retail investors' eyeball. So of course their money as well. All right, so I would demonstrate this. So do stay tuned on Tuesday, our day trading. By right, it should be on Monday, but Monday we have holiday tomorrow, which is good for some. Okay, personally, I don't really like too many holidays, so that's why, yeah, Tuesday we look into this. All right, so I'm not going to talk much about it, which one is good, which one is not good, but whether the earnings is going to bring good to the company and stuff like that, or bring good to the stock price or not, I'm not going to talk about that. The reason is because not all of it will have the price up, so we need to look into it on Tuesday to find out. So if let's say on Tuesday we don't have any of it, because human nature, okay, when you're trading, you're talking about how well you understand human psychology, how well you understand the human behavior. So if let's say you understand the human behavior really well, so you will know whether the price will move up or goes down. Like for example, in the stock market, we are talking about how well you understand the big boys' intention, how well you understand the big boys, whether the price movement is like, for example, in this kind of earning season, big boys will definitely take advantage of this earnings, positive earning, mark the price up higher after the announcement, and then trap some of the retail investors inside. So I mean, this thing is all we know. In KLSE or maybe in other world of the market, also the same thing. We know that every time a news or quarterly earnings show up, the price will mark up on the day when there's the earnings report are announced. But after that, the price will start to go down lower, right? So we know all that. So why is that happening? Same thing. Big boys mark the price up higher, attract retail investors to come in to park at the lower point. Then they sell the shares down to them, take some profit out from that. Then later on, if I say they want to mark up higher, then their problem. So as a trader, okay, I have a new quotes for every one of you. So as a trader, what we do here is that we need to know how to react to the market cycle and take advantage out from it. So how do we know that? Follow the big boys. All right. So that's my sharing over here today. Next week, catch the rebound and also catch those earnings stock for day trading. So short term wise is okay. So after next week, we will know that which are the stocks that is good for go for maybe mid-term or maybe shorter term trading. All right. Remember, give us a like and subscribe to our YouTube channel and follow our Facebook page. And I'll see you guys again in next week. And enjoy your holiday. See you guys. Bye-bye.
Ground and Search. True traders react to the market.